right, guys, let's go ahead and rock and roll. We're going to get right into the charts and do the Saturday live stream. So give me a audio check. Let me know how everything sounds, and then we'll get right into it. Mostly, I see just a bunch of members in here, so very cool. And we'll just let people kind of pile in, ask your questions. Just try to keep your stock picks to just one or two basically. That allows everyone to get something. I try to go into in depth as much as I can technical analysis on these charts. So keep your picks down to one or two, and I'll be able to cover everyone's. Hopefully everyone's having a good weekend. Let's get into these charts. Figure out where the opportunity lies next week. So if you're new to the live stream, obviously what I do is I'll do a broad market summary and just kind of give you guys my read on where we left off for the week across the broad markets, and then we'll just dig into individual stock charts you guys want me to look at, and we'll wrap up. I usually go for about an hour. It just depends on if we get into something interesting. Okay, so we'll start off with triple Qs because it's my favorite. I just like triple Qs because it moves a lot. You can, you catch the moves, you get a lot of movement, and that's how we make money, basically. All right, so I'll give you guys my broad analysis. Triple Qs, on Friday, just kind of was treading water a little bit. Sold down from the highs, obviously right here, and then just was holding the support level. That's kind of your former high. We're looking at the hourly chart right there. So that was your former reaction high. And so that's where the bulls were trying to step in and hold it. You have to realize bulls want to buy dips, right? They want to buy at support, just like if you want to short something, you want to short at resistance. Bulls want to buy at support. So as of right now, bulls have control. Just given the nature of how the markets are trading. And they were buying at that support level, so no change in that one. I also have this uptrend line on the hourly I've been watching, so I think a break of that should send this thing lower. But we do have that uptrend line. The other thing that I'm really paying attention to, like you'll see here on the again, this is just an hourly chart, so it's just shorter time frame, but no real negative divergence there. Just kind of bullish momentum on the PPO. Slight negative divergence on the RSI. Let me just clean this up here. You'll see it right, pretty much like right there. So you have negative divergence on one, but not on the other. So it's not giving us enough information that I would, feel confident in what that's telling me. You do have a bearish PPO crossover right there. So we'll see. Next week, obviously, is a big week. We've got the Fed on Wednesday, I believe. And it's a rate decision. So the market's trying to price in what's gonna, that's the thing. It's kind of a sad truth, but the truth is that the Fed's basically controlled the market pretty much for the last 10 years, but especially recently, given the nature of inflation and everything. The market basically trades on what the Fed's gonna do or what they think the Fed's gonna do. A lot of the time, they'll just trade on what they think the Fed's going to do, and then it's just an opportunity for the market to trade in one direction, and then that narrative flips before the Fed decision, and then the Fed actually does something completely different. So, but it's all based on the Fed, so that's it. That's why this week is very important. All right, so that's the hourly chart that I see on triple Q. So when I go to the daily. On the daily, no negative divergence on the daily. There's the potential, so I'm definitely looking for that. That's kind of one of my. I definitely can see that happening. A spike above the recent highs. It's really just right here. All right, anywhere from like 311, anywhere up in there, you're gonna be spiking into those highs, and you will definitely have negative divergence on the daily. Okay, so the only thing that would really negate the negative divergence on the daily is if if we just spike and then just keep running and running and running and just rally and just burn through the divergence, then yeah, you won't have it. So that's obviously the potential, but you know, you will have that negative divergence. One way to play it, okay, there's the conservative way, there's the aggressive way. The conservative way to play it is to, you know, if we get that spike high and we get that negative divergence, okay, which we will have negative divergence if you spike up, you know, next week. Okay, that's guaranteed. So one way to play it is once you see that negative divergence, then that's going to tell you to look for a sell signal. Doesn't mean you just short on a divergent high. You could short on a divergent high, but it's not always the best. You know, you don't typically just short because you have divergence. You want to look for areas of resistance or breaks of trendline support. You want to look for you know, that's what you want to look for. And then sell signals, things like that, reversal candles. But if you have that divergence, then, you know, probably go back down to the hourly and maybe watch this trend line right here. Okay. So let's say we just hit that and then rally and spike, but we have that divergence, then that's going to tell me, okay, this trend line, a break of that trend line is likely going to be the sell signal that you'd want to look for. And that would set us up for probably a trend trade because, again, the divergence is on the daily. You roll back and look at, you know, I was kind of trying to look back the last times we had negative divergence on the daily. And like, look, this is a bear market. Even these drops here, I can't find negative divergence on the daily here. I can't really, I do find it right there. You know, that was a divergent high. We did catch that short right there, but that was a divergent high. And on that divergent high, you got a drop of 11.5%. Okay, so that was probably the last divergence. Didn't really have it there. Here's a drop here. Didn't really have it there. And this is basically the last time you had it, which was the start of the bear market. Okay, you can see, look at that negative divergence. Big negative divergence on the momentum indicators on the daily chart. So, you know, and that was the start of the bear market. So, you know, every single time we've had negative divergence, we've had a drop, but not all the drops have come with negative divergence. So, yeah, I don't know. That's just something to read into. So if we do have it and it remains, I'd be looking for that sell signal, and that's likely. I can't say for sure, but I would anticipate that this bear market that we've been in is going to kick into high gear at that point, and we're going to probably have some sort of a big flush out move to really put in a near-term bottom, whether it's down here to 238 or maybe even lower. Okay, we could obviously go a lot lower, but I think we're going to start kicking this bear market into high gear because, again, this has got a lot of people bullish. Okay, and so that's what you need for the feel. If you're going to get the next leg lower, you need the majority of people bullish, thinking that, you know, we've started a brand new bull market. Bull markets don't start when rates are being raised, and they don't start when rates are being cut either. Okay, typically when you're in a bear market and the Fed starts cutting rates, they're cutting rates because things are breaking. Okay, and so at the end of the day, if things are breaking, it's not bullish for the stock market. So I don't know. We'll have to see. But there's my analysis. You know, that divergent high is really, I guess, my base case is to maybe run up there and get that. The other thing you could think of, if I go back to the hourly, you know, Fed's coming out next week. If you're a bull, you know, do you want to hold if you've got profits? Do you want to hold into the Fed? I'm not so sure. You might want to sell ahead of the Fed. So maybe we see some profit taking ahead of the Fed as well. I don't know. The charts right now are still relatively clean, so I could easily see that divergent high. All right, so that's what I have on the triple Qs. NASDAQ futures, it's probably very similar. There's a trend line to watch. Let's go to the daily. Now, the NASDAQ futures, you know, didn't quite make a divergent high. If I roll out, you can see that basically anything really above that 12,850 would be considered a divergent high, and you can see it just fell short. So again, I guess I could still see one little tiny pop up, kind of one more move up. All right. and then probably gonna fade that, but we'll see. So that's what I have on the NASDAQ. All right, broad market analysis. I know the NASDAQ's not the broad market, but SPY, we'll look at that. Here's the daily chart. Again, downtrend line, bear market, overshot it. Now, I mean, look what's going on here, guys. It's just, this is the chop. This is the pre-fed chop. So, you know, it can rip you up. I mean, I definitely know, like, I was pretty profitable early last week, gave some of that back, you know, when I stopped out. And, you know, that's just the nature of this pre-fed chop, but still profitable for the week, but definitely gave some back. But look, you've got down, up, rejected, breakout, back down. I mean, this trend line is what's going on. I mean, at the end of the day, we need to figure out what's going on with that trend line. And so if you're a bull, you buy, you know, then you're looking for that, all right? And you're looking for start of a new bull market. You see this trend here, lower highs, lower lows, higher highs and higher lows, and you're looking for a new bull market. If you're a bear, then, you know, at the end of the day, you're really going off of this trend line. You see this breakout, we definitely see that, and then you're looking for this to be a false breakout and a failure and a, you know, fall back down into the bear market trend and continue the bear market. From my perspective, you know, there's no real there is, sorry, I take that there is some divergence here on the, you know, you can see it right there on the daily PPO, and on the RSI, not really there on the RSI, nothing that I could, yeah. So kind of mixed. At the end of the day, the market's trying to figure out what it wants to do, and we have to just kind of let it show us a little bit more information. So I could see either way, guys. I mean, I could see, I don't, you know, think we're in a new bull market, but obviously we could be. Who knows? The divergence that's clearly going to be there in tech, you know, tells me that, you know, tech has a good probability of selling off even after making a divergent high and then selling off, and that likely will drag the S&P 500 down because tech is weighted. It's a heavy weighting in the S&P 500. I think it's 27% or 20, maybe not as heavy now, but 23 to 25%, something like that. It's the largest weighted sector. So if tech's moving down, you can be buying some of the other sectors. They're still going to get dragged down for the most part by tech. Okay, so that's what's going on there. And that's all I got, I guess, on the broad market. Let's get into your guys' charts. OJ, appreciate that. Have some profit. Hey, cool. Glad you got that GDX trade. I know, you know, I can flip over to the miners real quick. I know probably there's a lot of people interested in those. I know it, like, again, at the end of the day, I was talking about these a couple weeks ago. Where, you know, I think I was calling it out. I mean, obviously we have this bullish divergence. That was a divergent low, and I was really kind of hot on that. And I was looking across the board on all the miners, and they pretty much all had some divergence. So looked like one of the best sectors for a long, kind of the long sector. And from that low, that's up 16%, 16.5%. And yeah, so nice move there. The futures, I did notice they just hit. Look, they're kind of hitting this high right here. And let's see here. Yeah, I mean, you kind of have this like little double top, maybe a pullback. They're pretty stretched. And then the and actually, let me double check on these futures real quick. And you also have, you do have divergence right now on the, you know, on the daily. Now, it's not confirmed. So if these just keep going up, you're not going to have divergence. But you do have it right now. On the hourly, yeah, It's there. I mean, there is some divergence. It's not confirmed, and when something's pointed straight up like that, there's a lot of momentum to the upside. So you would definitely need to see some turnaround. I suspect, what's happening. At least my read on the market in general is they were pricing in, at least when it comes to gold, they were pricing in that the Fed's not going to hike rates. That's what I saw in the gold market. But then I see things like, so let's just go with that, right? Like let's say the market is pricing in that the Fed's not going to hike rates. That should be bullish for the real estate sector. When I rolled over to the home builders on Friday, I mean, you see that they were pretty much all down. When I look at the XLRE, the home builder, the real estate fund, it was down decently, 2%. So the real estate sector is not pricing in that the Fed is, not going to hike. Oil, commodities in general, like here's oil futures, that was down, although at support, but still down. So, that doesn't tell me that the Fed's not going to hike, because if the Fed's not going to hike, then inflation should continue to run, and just not quite seeing that. Ag commodities. So Joe, we can look at those real quick. The two that I like right now are Joe and wheat. Here's wheat. That's up. So, I definitely have been talking about this one for a while. Clean this chart up while I have an opportunity. And this one, I get, again, just on the daily. Look at that bullish divergence. Boom. Momentum is moving up. That's showing strength, even though price doesn't show it. And again, this is how you separate yourself from the amateurs, from retail. Retail, they're not even looking at bar charts. Retail's looking at, Yahoo Finance or CNBC. They're looking at line charts. They feel happy when prices go up. They feel sad when prices go down. They don't know why, so they tune into the financial media, and the media tells them why. But really all the media is doing is just making up an excuse so that they can get you to watch the media channels so they can sell advertisements to you. That's the reality of, the world that we live in. So these charts give us a lot more accurate information. And again, wheat looks like it is, it looks decent. All right. A little bit more, I think we need to the upside to really say, okay, we've now, signaled this as a false breakdown, but little pop and we'll be there. We should be off to the running. And then if you look at the wheat futures, same deal, bullish divergence on the daily. We've recovered that now. I mean, you can see this area of support. I've got it kind of marked out, and we broke down here, but boom, recovered it. And on Friday, recovered that. I mean, that's a recovery. So as long as they don't just, come out on Sunday night or Monday and just gap it down and just move it lower, then it looks good to me. So I'd be looking for the start of the next leg higher in wheat. All right. And ultimately, probably taking out those highs. So I don't know what that's telling me. Does that tell me that the Fed is going to stop their fight with the inflation battle? Maybe. Gold seems to think so. Wheat seems to think so. The real estate market and like oil and stuff doesn't quite yet. So, all right. So that's that. I know I went off on a tangent. Let me see here. But yeah, I mean, gold looks good. I mean, I think it's probably due for a pullback though. So just be prepared for that. I was taking some profit on Friday. We were pretty decently stretched. I mean, when I look at the daily, the RSI is not overbought really. Obviously, it could go up more. We did hit some resistance right there at 31.11, 31.10. You can see former reactions there. So it got a little pullback. I don't know. I think there's probably a pullback coming here. I don't know how much of a pullback, but definitely a pullback is what it looks like. Let's look at the dollar. Dollar was down. So that's, that's kind of saying that the Fed's done hiking rates. It's just we don't have enough information. We need to wait for the Fed to clear out. You know, there's your negative divergence on the dollar, on the RSI. Not so much on the PPO, but... All right. I'm going to move on. Just not a huge amount of information on some of that stuff, so... Okay, let's see here. What do we got? Drop me a thumbs up if you haven't done so. I do appreciate that. SMH. So that's our semis. We can look at SMH. I'm personally short SOXX. I don't have this SMH one. I had it before, but then when I pulled a lot of my shorts, I never took it back. But I do have this one. Or, sorry, I do have SOXX. Okay, so on this one, you have this upward... Yeah, we'll just put it right about there. You've got this upward trend line. Three distinct reactions. You know, maybe this... I can't quite make a wedge there, to be honest. You've got pretty solid resistance right in this area. I can see a lot of reactions rolling out. There's another, there's some more. And then look, once you broke below it, it was really resistance. You know, they overshoot it a little bit. They chop through it. That's stop rating action. But in general, it seems like pretty decent resistance. And there, sure enough, you know, we're above it. But again, you got to give things a little wiggle room, especially with the Fed coming up and volatility elevated. On this one, you did make a new high on Friday. So there it is. That's a new high. And that's clearly a divergent high. Okay. So we have negative divergence. It's really just an extension of the former divergence, but it's a very clear divergence now. See the RSI turning down right there, starting to confirm. You need to see the PPO do a crossover. So we have negative divergence, and it tells me that we should be on the lookout for a trend reversal. Trend has been up. This is telling me that look for a trend reversal. Now, we don't have the trend reversal yet. You don't have a sell signal. If you really want to be conservative and wait, you wait for a break of this trend line right here. Okay? And if you get that, you should... I think you break that trend line. I think you're coming back down to... What'll probably happen, to be honest, is we come back down and work our way lower and maybe hit this trend line all the way down here. I don't know if it's going to play out like this, but and maybe make a new low or an equal low while back testing that trend line support. Okay? So that's what I have on that one. And then if you want to look at SOXX, it's probably very similar. This one, not quite a new high on that one. So, you know, again, some of these things maybe want to grind up and make slightly new higher highs Monday, Tuesday, and maybe early Wednesday, and put in those divergence, and then we get those breakdowns after the Fed. I don't know. All right, PBW. What is this one? Energy. Is this leveraged? No, just him. Oh, this is clean energy. Okay. So a lot of this clean energy stuff, at least in like 2020, 2021, was just kind of part of the hype train. And this probably, yeah, see it. So it's in a bear market. Let's see if there's any signs of a trend change. Hopefully you didn't ride this thing all the way down, because it's a very obvious clean bear market. Little couple whips down below. False breakdowns. I bet they came with bullish divergence, but we'll look. Well, that one did definitely there. Okay, so, you know, you're just in the middle of this channel here. I mean, yeah, I mean, I don't see any change in trend here. You've got, you know, momentum's pointed down. You're slightly higher right now than the former low. There's your low in price. There's your low in momentum. And you're higher in price and you're higher in momentum. So no trend change, just continued downtrend. Okay. This was a divergent low here, and from that divergent low, you got a rally. You got a pretty strong 35% rally right into the 200-day, and it was rejected right perfect at the 200-day. It's a bear market, guys. The large institutions are trading this as a bear market, which means the algos are programmed to sell into at the 200. They're selling the rip. All right, and so that is what's going on, at least in this one. All right, that's it. No, you know, you're probably going to come down and hit this trend line down here. You know, you just extend that out. And then what? FIS. Did I cover this last week? FIS. Lower low in price, lower low in momentum. No trend change on the daily chart. Yeah, I mean the hourly's got something, so maybe you get a reaction rally. Because it's obviously plunged. This must be a financial thing, huh? Commercial services. But yeah, all right. So I'm moving on from that one. First solar. I've seen that one selling off. I still just am kind of hesitant on it. Little gun shy. We've taken a couple shots at it, and you know, a couple trades have worked, a couple haven't. It's just. I mean, look at that negative divergence. That's ridiculous. You know, this is just building and building and building. This thing has a day of reckoning coming, guys. It's going to be likely, it might be tough to catch. They might bring it up. It might be in a gap down, but this thing might just crash. You know, I suspect at some point it's going to fill that gap right there at 77, 72. Okay. I would put good probability, but the thing is I don't know when that's going to be. Does it keep grinding higher and then do it? It's hard to say, because if I want to short this, I got to ride out this trend, and I don't want to do that. So I guess the best thing we can look for, if they give us the opportunity, you've got a clear trend. We broke it once right here, but see that? Let me just double check on that. Yeah, you broke trend. If I go to the hourly, I probably can see. See, you broke trend, but you had bullish divergence on the break of trend. So it's kind of telling you false breakdown. And also, a breakdown really shouldn't look like where you break and you just kind of are right hanging out. You know, you really do want to see an impulsive sell signal. Gapped up. The bears, it was a bear trap, so it ramped higher. The next break of trend is probably going to be the real deal. So I just look for that. Start breaking trend. I think we're probably on the real deal, and we'll work our way lower. My support levels, I've got a 3 basically. Right here, 145.10, 119 to 120-ish, somewhere right in there. The 200 maybe, but that might come in right here, and then all the way down there. I do like it as a short. I just don't like it right now. All right, that's that one. SMAR. All right, let's see here. Smart sheet. Yep. This is tech. So obviously just, this is going to follow the triple Qs for the most part. Yeah, this is diverging. Okay, so a divergent high. Maybe you're going to put in another divergent high. It's so close if it hasn't even done it. I could see next week just a little pop up here, put in another divergent high, but it is diverging. So you've got bearish momentum. So on this one, I'd probably, could be that, guys. That you can see I've got this as probably a bearish rising wedge. I would probably go with that, to be honest, because I've got support through here. There's some reactions here. I've got an impulsive breakdown, which looks like a sell signal. And I mean, really the sell signal, that looks like a sell signal right there. I've got the negative divergence. I've got the bearish rising wedge. Breakdown, back test. objective short is, yep, I like it. I'm going to add this one to my short list. If I can find it. Okay. That's how I'd be treating that for right now. Now, you're probably not going to get the actual move until after the Fed, I would think. But I think it's objective to take a starter short right here. You know, maybe a starter short. It depends on how much you trade, but my starter short positions are sometimes half, sometimes a quarter. It depends on the stock, but starter short and then add to it if you get that rejection candle, which would be like a gap down or a bearish engulfing, some sort of big impulsive rejection candle would tell you that that was the back test. Starter short, and then look for that to roll over. And then we look for like this gap fill right here. I would say that's a decent target. And then probably gap entry, obviously. All right, 35.50 down to 33 for the targets, and those would be moves 23% down to about 30-ish, 29%. I like that. All right, that's a good short setup for sure. All right, moving on. Obviously, don't fall in love with it. You know, we got the Fed, so, you know, but I think it makes sense for a starter short. SMAR. Did I cover that one already? Oh, that is this one. Smart sheet, sorry. ZS, that's what, Zscaler? Or, yeah, either soybean futures or Zscaler. So on this one, just a downtrend. You know, you got the lows here. You maybe get a little bounce there, but I just see a downtrend on that one. My target, I think you're going to run down and fill this gap, guys. I've marked that one out before, so it looks to me like it's going down to 80.25 before it gets some sort of a bounce. Is there transaction capital in South Africa's JSE TCP? I don't know. Can look at that one, TCP. Yeah, this is a financial thing. Commercial services. This is the same as that other one, that FIS, but not looking good, guys. That's a crash. It's just not looking good there. This is not healthy. And I mean, yeah, you're going to get major bounces back, major drops. This is now in the hands of like the momentum traders and kind of the gamblers who like to just like, you know, not my thing now, but see, it hit the COVID lows. It bounced off of that. I don't know. It's probably going lower. It's probably going to like do, maybe it could rally, and then I think it's going to roll over, but look at the momentum just plunging. Okay, we got, moving on, IWM. I didn't cover that one. I guess I can. Just 1 second. ADSK. Autodesk. So on this one's kind of just been like grinding higher, clearly. That's a rising triangle. These typically resolve to the upside, but momentum's moving up as well. So no real divergence that I would be, you know, at least on the daily chart. You've got just momentum moving higher. Your divergence was here, all right? This is key, right? See, this is a downtrend. Drop, 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 drop. All right, start putting in this bullish falling wedge. You start to drop down to these lows, and boom. See that low right there? Low cluster with a higher momentum? That's your divergence. That's telling you, okay, look for a trend reversal and then you look for breakout signals, buy signals, things like that. And obviously, once you got that, I mean, look at that from there, from that low, it's 42%. So, but now I don't know. This to me just looks like it's kind of consolidating. So, I don't know. Not one of my trades that I would take. Meta and Nvidia. So Meta is, I covered a lot of those things in the videos last week, basically at resistance. There it is. See the resistance that I put in? Divergent high there. We talked about that. And on Friday, sold it off down 4.5%. So, you know, again, this sell-off didn't come out of anywhere. All right, we were at resistance. We had divergence. This is a daily divergence, and it's telling me that this move up in Meta is done. All right, we could maybe get another little spike high after the Fed. They can play games, but I think in general, this move is done. Okay. Obviously, I mean, you could spike up to 224, but if you do that, you're still going to have the divergence and you're spiking into resistance. So it's sell the rip at this point. You know, if you get the rips, you look for resistance. It's shortable. It's objective. And then you've got this trend line to watch. So I would say we're probably coming to the trend line. They'll probably try to hold that because the bulls, the majority of bulls are going to, first off, most people are bullish. The herd is bullish. So when you hit support levels, they will be bullish and they will buy dips. Only when things start breaking, the herd exits a bullish mentality and a bullish trade kind of near the bottom of the down moves. And that's why you get the big impulsive kind of crashes, because that's when the herd is saying they're exiting. They don't exit when you first drop to support, okay? They're going to continue to buy. They exit when you're like crashing, you know, or starting to crash. So just, you know, recognize that when you have been in a bullish trend and you hit a support like this trend line, you're probably going to get a little bounce. But that doesn't mean the trend continues. This divergence tells me that the trend is dying. Nvidia, negative divergence. It's been wedging, bearish rising wedge. And, you know, they played a little game last week. I was okay writing this out because here's the thing. And I know that a lot of people get frustrated when, especially with my trading style, because my trading style is not jumping on a trade and being right the moment you enter the trade. That's a lot of people, especially if they've been just recently trading. 2021, 2022, they just want to like jump into a trade and see their account going up day in and day out and just be right from the time they enter the trade. Okay, you need a bull market for that, guys. You know, if you want that, you need a bull market where you just throw money, dumb money goes into pretty much anything and it consistently goes up, you know, most of the time. That's a bull market, you know. So that's not, you know, this trading style is really more based around trying to be the smart money and trying to enter the trade before the masses know what's up. So in this situation, I see this negative divergence telling me that we're about to head lower. The herd and the masses don't think that because they see this price action and they say, yay, prices are going up, I'm happy. They won't exit when prices are going up. They will exit when we're crashing. So, and if you're in this trade and you're getting frustrated because you're short, well, you know, then think about the other side. All right, the bulls are not exiting because prices are going up. And if you're short, you want to exit because prices are going up. But what I see is the next move, okay? This move up, if you're still bullish, you're the bag holder if we get this, all right? So I want to profit from this. The only way I can profit from this is to not be bearish when we're down here, when the herd is exiting, and that's when I want to short. I can't profit from that. It's too high of risk. I can only profit from this if I'm willing to, you know, try to find that move before it happens. So that's the nature of how this works. We've got bearish rising wedge, negative divergence. You know, they did this little dip below and then they popped it back into the wedge. But what did they do? They just popped it to the top of the wedge. They're pretty much at the apex of the wedge now, so it's decision time, which makes sense because the market loves to kind of build up into key events, which is what next week is for the Fed. And I think the Fed's going to hike rates, guys. That's what it, I don't know. This chart tells me that the NVIDIA traders believe the Fed, the smart money at least, believes the Fed's going to hike rates more than what the market's expecting, or they're going to talk more hawkish. The ECB just did it. You know, they hiked 50 basis points. Maybe the Fed does it too. These central banks, yeah, they love, especially the ECB and the Fed, they love to just like do the exact same thing. I think it's a way that they work together to kind of help protect their currencies. So like if one's inflating, your currencies only inflate or lose value relative to other currencies. So if you're inflating your dollar like crazy, you will lose a lot of value if the ECB is hiking rates and you're inflating, your dollar is going to plunge. But if you work with the ECB and say, hey, let's inflate together so our currencies stay relatively strong against each other, I think that's what they like to do. So maybe they're going to do that with the hiking thing too. I don't know, just speculating there. So I'm guessing this, guys. Support there at 207 or 208, probably a little back bounce up to about 224-ish, and then the bottom falls out. All right, so we'll see. You know, we'll see if that's how that plays out. That's NVIDIA. I covered Meta, IWM. All right, let's see here, guys. IWM. Yeah, I mean, look, I don't know how. The only way I can read this is bearish. Okay, I've got a trend line. Pretty well established trend line in red. I've got a breakout. I've got a back test, a nice rally. And I've got that whole move, that whole breakout being faded. And look, I mean, they broke down, they recovered it, broke down, retested it, broke down. It's chop for sure. So I can't read too much into it. I can't say that, you know, it's definitively a false breakout and a bull trap. But as of now, it is. So this will show us after the Fed what it wants to do. It's tricky. It definitely is tricky because if the Fed still talks hawkish, you know, this is going to probably continue lower. This is, you know, a lot of your banks are in this, regional banks are in this IWM. So as of now, it's below resistance. So we'll just watch that. All right, where am I? What happened next? A huge bounce bear trap? Well, that's possible, but you know. Yeah, I can see a bounce. I can see a new divergent high and then a rollover, you know. DBC. Commodities. What kind of commodities are these? This is probably a lot of oil, I would say. I mean, it's probably going to continue to correct a little bit. So I don't know. You know, it definitely puts my... That's why I don't like the broad commodity index right now. It is diverging, obviously. You can see the bullish divergence. Still diverging on the PPO and... Still diverging. It does have bullish divergence. So this is a correction in a bull market. This is a bull market. this is a correction. All right, it's not a brand new bear market, at least not highly likely. I think it's a correction in a bull market. You got some decent support right there at about 21.85. You've got, so I'll just mark out the support levels. I'd be more interested in buying the dips. $21.85 is support. You continue lower. 1950. I don't think you go much lower than that, to be honest. But yeah, I'd be buying the dips, I suppose. Watch the bullish divergence. As long as that remains, that's telling you that this is a correction in a bull market. And I do own wheat, and I do own coffee, which is Joe. I've got both of those. Long. Right. Baba. I mean, there's some support there for sure. I've got several reactions, you know, that's kind of support. You've got, I mean, there's no real daily divergence. On the hourly, you have divergence. I don't think I'd short this thing. You know, I'd probably be leaning more long, at least for a bounce. There's a downtrend line to watch. So from my perspective, I'd look for a buy signal on a break. And also you've got this, you're just below this support level, 85-ish. So a break above 85.14, you're going to take out this downtrend line. You're going to take that out. You get that, you should head right to the 200-day. And then, I don't know, there, you know. It's only an hourly divergence, so it's not telling me potential for a, you know, huge trade, but I could easily see a move, a 10% pop or something. So that's what I'd be looking for. Could continue higher, but the 200 you should get a pullback at. So I would say the best trade or the safest trade is, you know, a pop above 85. It's about 85.30, should run you up to the 200. All right. AMD, I did short that one, so I'll cover that, I guess. I covered FSLR already. AMD, I see lots of AMD. So we're popping into resistance. No change here, guys, really. I mean, my video explained it. The divergences on the daily, I mean, it's there. I think we get a pullback next week. Might even get it before the Fed. It just depends. You know, if you drop before the Fed, that's one thing I want to point out, guys. If we get a move, if we get a decent move right ahead of the Fed, let's say we sell off before the Fed Monday, Tuesday, maybe Wednesday morning, it probably lighten up on shorts and let the Fed clear out. That's probably how I would treat it. You know, if you're short on things and we get the sell-off, take the profit ahead of the Fed. Let the Fed clear out, and then we'll look to reposition. All right, that is AMD. Snow. Well, I'm not in snow. I don't have a trade there. It's still holding this support line here. All right, so there's your downtrend. This looks very similar to like the SPY or the triple Qs. You're still holding that support line. No real divergences on the daily. Bullish divergence on the hourly. So yeah, I don't think I'd short it. you know, to be honest. What, you know, I mean, I don't want to go long here, really. It is, all right, look, if you're bullish the market, then you're bullish this, which means breakout, backtest, you buy at support. That's it. If you're bearish, I don't necessarily want to buy it. This was your divergent low, so on the daily, so yeah, I don't know. Disney. Same kind of chart as snow, all right? See, they're all lining, they're pretty much all the same. The market is, you know, kind of, a lot of it's the same. So that was a divergent high. I marked that out. You obviously got the pullback. You're at support. So if you're bullish, you buy it. All right? I'd probably be more interested in buying this one than shorting it. I don't know. But yeah, I'd probably be more. I mean, this is a lot more of a safer stock too. It's kind of a growth, or not a growth stock. It's just like a blue chip. Let's let the Fed clear out and we'll figure that out. But this looks more like a long to me than anything. But, I mean, snow could be too. There's a downtrend line. It probably has bullish divergence on the hourly. Yeah. See? These are divergent lows. There's a, you know, there's this trend line to watch. So you break out and, you know, looks like a bullish setup to me. So we'll go with that. Okay. Just scanning through here, guys. I'm going to go for another 10 minutes and then we'll wrap up. So drop me a thumbs up if you just joined and you haven't clicked that button. Just a little button click. It's pretty easy. Nat gas. Yeah, I'm not hot. I don't have anything on nat gas. Let me see here. I'd be bullish. That's the way I'd lean. Bullish divergence. This is a dip below that little support level. It could be a false breakdown. I don't know. For me, I'm not, you know, I'm not in it right now. I'll probably just let the Fed clear out and we'll see what this wants to do. I don't have a position in this. Tesla. Yeah, let's look at Tesla. All right, so I think Tesla's at resistance here. It's about 187. I've got some reactions through here. All right, so I think that's resistance. We had negative divergence showing up here on the daily. All right, so these are kind of divergent highs. The last time I had negative divergence, I was looking at this, and I think it was that triple top. Yeah, see, this is the last time I had negative divergence, and we caught most of this short trade. Not all of it, actually, but we caught a chunk of it. And triple top there, negative divergence, and from there, the thing fell 67%. You know, we hit our support level at 108, and then had a bear market rally. Rejected at the 200-day. Lower highs, lower lows. It's a downtrend, guys. So that's it. That's how I treat it. You know, larger picture, we're in a downtrend. We're at resistance. Looks like a short to me, to be honest. Could take a starter short here. I could easily see after the Fed them playing a little game, though. They could do this. They could pop it up to the 200 and reject it again. If they do that, you're still going to have negative divergence. It'll just look like that. So that's kind of the risk, especially ahead of the Fed, is a potential pop up there. 20%. I don't know if we'll get it, but you know, that could be a risk. So, it doesn't make sense to go super heavy ahead of the Fed at least, but, starter position potentially. Okay, let me figure out where I'm at. Let me kind of scan these last couple comments. I've just about gotten through everyone's comments, so thank you for kind of keeping the picks, limited. Hopefully I've gotten to most of yours. There's a couple more. I'll try to get to them. Someone says SMAR looks like a bull flag consolidation. Okay, I understand. But the triple Qs looks like that too. Let me look at this. SMAR. No, I don't see a bull flag. Not on the daily. Maybe on the hourly, but nah, that's not a bull flag. I don't see that, guys. So, all right. So, SEDG. Is this financials? What is this? Oh, that's the one thing I did know. I didn't catch it, but these industrials, they are all like just, plunging. This one, I was looking for the short here because I knew this one was down. URI is this rental one. EMR downtrending, back within the bear market. Look, EMR, it's very similar to what I think the market's going to do, but we're in a bear market. You pop it, negative divergence. I talked about this up here. That's why I circled it, saying there's a very high probability that this is going to be a false breakout bear trap. And it was. All right. Plunged down, downtrending. So URI, or not, ITW, this was one I was looking at because it's not too far away. I think you got a sell signal here, and it's downtrending. Support right there at 217. Clean negative divergence. All right, so it looks like there's more downside. It's not highly traded. It looked like about 800,000 shares a day, so not super high volume. Yeah, I know you can do Control Z. Someone says I can do Control Z to delete. I know that, but I don't always delete all my stuff. That's just undo, right? So, I can obviously undo that, but, I don't want to go all the way back through, and I don't know all the lines I've drawn. I know the hotkeys. CLM or CVS. Is that, let's see this. Is that oil? Oh, that's the healthcare stuff. Bear market. Lower momentum, lower price, no signs of a trend reversal, at least on the daily. Maybe something on the hourly. It's pretty oversold. But that doesn't mean you're going to bounce. Let me look here. Not my favorite trend line. But you can clearly see we're in the zone where it was former resistance. Okay, whether that's the actual trend line or not, there's definitely a zone. And we're there, so that should be support. You should at least have a bounce off of that. I don't see anything on the daily right now telling me that this big trend is going to reverse. So that doesn't, breed confidence. The hourly probably has something, yeah, the hourly, you've got some bullish divergence starting to build. Look for a buy signal before, something like, let me see here. Yeah, can't really make that out. It's the best I can do right there. And that is not a trend line because I only have 2 reaction points. So it's a downtrend, and I just don't have enough to tell me that there's going to be a reason to go long here yet, You do have bullish divergence. So, I don't know. You could get a little bounce. It's probably going to get sold into, though, but I wouldn't want to short it here. Let's put it that way. I don't want to short this. I'd rather go long, but I don't know if I have enough to say I want to go long here. It's a little speculative. Lift. Or CLM. What's CLM? This is just mutual funds. I think this is the same person. Somebody's been giving me a lot of mutual fund stuff. You know, bullish divergence there. But this thing's pretty much collapsed. Hopefully, you know, hopefully you didn't write that thing down, which, you know, if it's a mutual fund, you probably did. Just because it's, you know, people that trade mutual funds, it's 401ks typically. And the sad thing about 401ks is they're pretty much perpetually bullish. You know, you need a bull market to make money in a 401k, which kind of sucks. I personally, you know, the 401k that I've had, that I've transferred, I moved it over a couple of years ago to foreign stocks, and you know, that's it's outperformed the stock, the S&P for sure. I think it's like barely down, so kind of flat basically, but lift. Okay, no more guys, no more stock picks. I'm gonna just kind of finish up the list and then get going. So let me just kind of cover these ones. Lift, obviously bouncing off that support line. There it is. You know, that's it. It's bouncing off support. I don't see bullish momentum here. I see a reflexive bounce. So I wouldn't want to go long here, to be honest. I mean, you have huge bullish divergence, but that's not enough to really go off of. You know, to me, this still looks like sell the rip. You know, you rally up to 12.17, it's sell the rip. 200 days, sell the rip. I just don't see enough to say I want to go long. I mean, yes, you do have this trend line. You know, support, little bounce. You know, support, they undercut it a little bit, but bounce. So, yeah, I mean, it's still, you know, but this is trading with the triple Qs. The triple Qs is going to be our guide as well, and the triple Qs is about to put in a divergent high if you get another spike higher. So does lift pop up and hit that 1220? Maybe, could do that, but I would sell the rip because triple Qs would have negative divergence if that happens, which likely is going to put pressure on this as well. So that's my thoughts there. MU, Micron. Semiconductor, I already covered the semis basically, but you know, this is not a bull flag. I know people maybe think that's a bull flag. That flag's pretty it could be a bull flag, but it's pretty played out. You know, bulls want to see this. They're reading that as a bull flag. Maybe it is. I can't say definitively it's not. Momentum is building. Bullish. I don't know if I'd be bearish on this one, guys. I'm changing my mind a little bit. You know, it looks like you're about to get a PPO crossover. You don't really have divergence that tells me that it's like going to continue higher. There is that flag. I think I'm changing my mind on it, but I don't know if I want to be. Honestly, I'd rather just like be nothing on this, be flat. You're at the 200. You're getting rejected there at the 200. The other thing is, one way to read it, you're above the 200. Why didn't you break out then? No, you failed, and you're getting rejected at the 200. All right, so I think as of now, the bears are in control, and you're really just downtrending. So I would just probably think we're going to continue in a downtrend. Okay, a bear market. That's how I'm going to treat this. Yeah, but I wouldn't want to short it. I'm looking at this, and it's just not really at a key level. I don't know. There's just better ones. I'm all over the place on this one. So, honestly, like when I can't make my mind up and I can't see it clearly, I just move on. That's what I would say. I don't have to have an opinion on every single stock. So, I guess no opinion. Roku. I'm going to do Roku, Verizon, and that's all I'm going to get to, guys. At the 200, negative divergence on the daily. There's your divergent high. Bearish. That's an easy one. It's just a very clean setup. We're at the 200. It's objective to short. Now we got the Fed. So here's the thing. The market could do a little poppy thing where they pop up and make a new divergent high. That's possible. I don't think it's going to happen, at least in this stock, but it's possible. You know, this thing, here's what I think is probably going to happen, because the triple Qs isn't too far off from making a divergent high. So I think they're going to sell this thing down maybe Monday, Tuesday, hit some support. Maybe the Fed comes out and the market just randomly is like, oh, that's bullish. They put in that divergent high on the triple Qs. This thing pops back into the 200 and it still fails. The divergent high gets sold into on the triple Qs, and then it's lights out. Regardless, I'd rather short this thing than go long. I don't have to short it ahead of the Fed, but, you know, looks like a short to me, and I would look for a move down to probably this trend line down here. So that's that one. And then I've got the last one I'm going to do is, what did I say it was? Airbnb or Verizon? I guess I'll cover Verizon. Not my favorite, because these are just like, people buy these for the dividend, but telecom. Bear market. No indication that the downtrend is over. All right. You've got momentum heading straight down. You know, it's not divergence because you haven't made a new low. So I put good probability you're going to take out this low here and put in a new low. Maybe you have bullish divergence then. Maybe you don't. But as of now, momentum's heading lower. Price is heading lower. No real divergences. So lower on that one. No guarantees, of course, but just, you know, good likelihood. And if I look at the weekly, I mean, yeah, I think you're heading down here, guys. Down in this area. It's probably your COVID low. Oh, no, that's 2008. That's where it looks like it's going, so. All right, that's all I got. Went for about an hour and 10 minutes. So you guys have a good weekend. I'll catch you guys on Monday. Fed next week, so expect some choppiness. Probably going to a holding pattern just right ahead of the Fed, but I could see Monday having some fireworks, and then we'll try to figure it out. So, all right, catch you on the next one.